Hello traders, this is Blake Morrow with ForexAnalytix. You are listening to the week ahead video for January 7th, 2018. I don't think you guys know this, but well, you don't. I'm going to tell you right now. I've had to do that intro 3 times because I kept saying 2017. It is 2018, and Happy New Year. I hope you guys had a great start of the new year. I know myself, I actually struggled this week. I stepped in front of the risk train a little early as the stock market continued to hit all-time highs. So you know it hurts when you do that. So I've got a little bit of making up to do this week, but I've got a lot of good ideas, and with ForexAnalytix, we've got a lot of good analysis. I think that could possibly play into next week. But before I get into all that, I just want to let you all know that our New Year's offer is up now, and it's valid till January 15th. So you guys have about a week. If you haven't taken advantage of it already, a week. Buy 1 month, get one free, or a 25% discount on semi-annual plans, 35% discount on, 25% discount on semi-annual plans, and a 35% discount on your annual plans. That's the best pricing that we've offered, so I hope you take advantage of it. All you have to do is click this little button where it says sign up today. Once you do that, make sure you download the mobile app and from the iTunes store or the Google Play Store, so you can get all the notifications and updates and support and resistance level breaches. I actually get my stuff on my iWatch too, which is really cool. It was my Christmas gift for my wife this year, and I didn't think I was going to enjoy it as much as I have, but it's awesome getting my alerts right on my wrist too. So and that's obviously you have to have the app in order to do that. But okay, enough about that. Let's talk about this last week. This last week, stocks were extremely strong. We hit all-time highs, and the S&P continued to rally. And I mean, this risk rally has been out of control. You can see the entire week, Tuesday, Wednesday, Thursday, Friday, every day, the market just blasted higher. And I got stuck in front of that because I started selling on Wednesday and got stopped out pretty quick after that. Now, I wasn't trading the S&P. I was trading some yen crosses. I was shorting some Aussie yen, New Zealand yen. I can show you the examples of those, and I got stopped out. But it was good risk reward. I was willing to take on that risk, and whenever you have a good risk reward, you have to take advantage of it, whether you get stopped out or not. The important thing is when you're trading is to make sure you can identify what the risk is, and I identified it, took it, and it didn't work out. So that happens as a trader. But as you can see, the S&P has rallied quite substantially. We are at channel resistance and at a 261% extension of the last pullback that we saw in December. Now, that's significant because it's a key golden fib, but we did go out at the highs. So that's the one thing that I am a little concerned that we might continue higher, is because we went out at the highs. So it's hard for me to sit here and say, okay, things are going to stop on Monday. Now, but something important did happen over the weekend, or on the weekend, actually on Friday. Daily sentiment index and I'm going to take this over here. I'm going to show you guys the DSI for, and this is something that we subscribe to as a company, because I like to take a look at it, every day actually, but more importantly, I look for these extreme readings. You can see the S&P and the NASDAQ registered a 94, 95 on daily sentiment. Okay, those are very extreme readings. Anytime you get above 80, I start taking notice, but especially once you get above 90, and once you start getting into the 90s, you can see that there's the 94, 95, 93, 91. Those are extreme. That means the market is extremely bullish, and usually it's like everybody's bullish, and the tide tends to turn in those types of situations. Also, when you get negative or readings that are extremely low, like volatility down at 12, you can see it right there. Those are very negative, and we could turn soon. So I want you guys to be aware of that, because we're at some resistance, very extreme readings. So what could happen? Some of the things that could happen are the yen pairs could turn, and I'm going to talk about those here in a moment. But what I'd like to do first, before I do that, is talk a little bit about the euro, because the euro, okay, here's the euro dollar. It struggled with these highs, and I thought towards the end of the week, I thought we were going to at least test those highs above 121 and get to the 50% retracement. You can see it right up here at 121.67. You see that? I was thinking we might hit those highs and reverse. Now, I've been in the camp, and I'm 95% sure. Last week I mentioned this, that I think the dollar is going to be weak throughout 2018. I don't think it's going to be a straight shot higher. Matter of fact, I think it's going to be very choppy. I think that the dollar could weaken and the euro hits, 121.67. We hit new highs, we reverse, we come back down to 119, then we head up to 122, 123, yada yada yada. I think it's going to be extremely choppy. It's not going to be as clean as you've seen here. This rally that we saw all of 2017, I think 2018 is going to be very choppy as we move up into the mid 20s, 120s, maybe the high 120s. Anyway, I was reading some analysis from one of the major, one of the top 5 major banks that is expecting the euro dollar to rally towards the 135 level in 2018. I'm like, wow, that's a pretty big bold call, but it'd be this basic bull flag working out all of 2018. I don't know if we're going to go straight up there. I do think that we are making our way up there. But it's just not going to be a straight shot. I don't believe that. And if you look at what happened this week, it's pretty good evidence that things are not going to be easy. You could see a lot of volatility as we get to these big inflection points, which is good as a trader because it gives you a little bit of room for wiggle in case you mistime something. But at the same time, being very directional is going to be tough to do, I think, with the dollar. And I wanted to throw that out there because I wanted you guys to know where I stand with the dollar index. And do I think that the euro dollar could pull back towards 119, maybe even 118? Yes, I do. And am I playing it to the short side? I'm not sure yet. I'm not yet, but I'm not sure just yet. I do know that the market, the CFTC data, also the IMM data, that it illustrated that speculative traders are at the longest that they've ever been in the euro. And you can go back and look at monthly data going back all the way before the adoption of the euro, when it was basically the Deutschmark. We're at all-time highs as far as speculative interest goes, and that means that it's extremely bullish sentiment. There's way too many longs out there that are speculating that that we're going to rally, which means that we're probably going to turn lower first before we continue higher. I still think it's very bullish for the euro, but sentiment's a little extreme. So I think the euro dollar could pull back. I haven't shorted it yet, but there is something that I'm looking at. I want to take you over to the euro yen. The euro yen had a very key rejection on Friday. Now, look at this candle. Okay. The candle was a shooting star or a gravestone doji, however you want to look at it, at the golden 161% fib. One of the things that was my saving grace on Friday, actually, is Friday morning, actually it was Thursday night, I put out an order to short the euro yen at 136, I think 50 is the price that I got, or 49, and I got filled, and I closed out of the position already, but I was taking advantage of that 161% extension. That's something that I did Thursday night, Friday morning, before non-farm payroll, and I ended up staying in 2/3 of my position through non-farm payroll because I had a good price. Now, I already closed it, but I still am looking at this as an opportunity to be on the short side. Why? Because what I was showing you with the risk appetite with the S&P. If the S&P is peaking, then pairs like the euro yen might find some resistance. But what I'm really interested in is I'm looking at like the pound yen. Okay, here's the pound yen. The pound yen has made a brief new high, But matter of fact, if you look at the pound yen, I've got a little different analysis on this this live chart. You can see these highs. It's actually, I'm trying to zoom it in there for you. You can see these highs. You can connect the highs, and it's a trend line. All right, even though we've reached new highs as far as a breakout scenario, is it really breaking out? I don't know, and that's why with the pound yen, we're up at some pretty key resistance here as well. But let's take a look at the Aussie yen. Okay, here's the Aussie yen. The Aussie yen at the 78% retracement, relative strength is extreme overbought levels. Okay, so that could risk of a pullback. See, I got in a little early because I was shorting it right here at these highs, and I got stopped out as we went above there. Yeah, that was a little bit mistiming on my part. Here's the New Zealand yen, similar situation. I shorted it here, but we broke out new highs. I got stopped out. We are at the 78% retracement. RSIs are extreme. So if risk turns, risk meaning the stock market turns lower on Monday, Tuesday, all these yen pairs look very attractive again as a counter trend trade. But if you do embark on a trade like that with, you know, the Euro yen or New Zealand yen or Aussie yen or whatever yen pair you decide, make sure you keep your stops tight and you trade accordingly. Remember, and this is the same thing that I had to keep in mind when I was doing it as well, is that when you trade counter trend, when something's going, you know, in one direction, like this has obviously been very bullish since the French. This is the French elections right here. Actually, the French elections right here by the where we have number 2 marked on this Elliott wave count. Once when you decide to go counter trend, you have to realize that you have to trade smaller position sizes and manage your risk appropriately. That means make sure you keep your stops relatively tight because you are going counter trend, and it's a little bit more difficult timing moves like this. But again, when you're looking at a lot of different things lining up, like extreme sentiment in the stock market, extreme sentiment and positioning. I should also mention that yen positioning is extremely weak. That means there's a lot of people are expecting the yen to continue to decline. If those reverse a little bit, then we could see a reversal in some of these yen pairs. Anyway, guys and gals, I don't know if you can hear in the background, but my dogs seem to be going crazy, and they're probably reminding me that this video has gone on a little too long. So with that being said, guys and gals, I hope you have a great trading week next week. And if you like this video, make sure you click the little thumbs up button, and also make sure you subscribe to the YouTube channel, because if you do that, and you'll never miss one of these videos, and you'll never miss our videos that we publish every day on our live face webinars with Dale Pinkert, and we have a lot of great interviews. So make sure you subscribe to our YouTube channel. Guys and gals, have a great trading week next week, and I hope it's a great one. Thank you.